Brad, quick question. Paul here. I bought some LEAPS about a month or two ago so I could do poor man's covered call. And I bought the LEAPS on a company called DraftKings, DKNG, but I like the company long term. However, it sold off because of a deal with Entain or whatever, and it's down about 20% from where I bought the LEAPS. And the LEAPS don't expire till January 2023. So I don't really want to sell covered calls against those LEAPS right now when the stock is down so much. It was at 60 when I was buying the LEAPS, and now it's at 50. And I'm afraid if I sell covered calls, I'll be at risk of getting assigned if I sell it at 53 or whatever, because the stock tends to pop quick, you know.
Mm-hmm.
And I don't want to sell my LEAPS real low in order to close out my covered calls.
Right.
So should I wait until the stock goes back up to close where I bought the LEAPS at before I start selling covered calls? Any info would be greatly appreciated. Thanks, Brad, and thanks for everything you do.
Paul, you're right on the money, man. It's I'm glad I'm confirming your thoughts and not trying to sway you in one of the directions. First and foremost, you got till 2023. It's probably going to go up. Another great thing about LEAPS, and this is kind of why I say that I don't buy LEAPS options with the poor man's covered call in mind. Now, granted, if you're in my Discord and you know me, you've been around me, you know that I want to trade the poor man's covered call. But by telling myself that that's not my motive for the LEAPS, I protect myself in situations like this. Because there is going to be times, especially throughout a year plus, that there's going to be a pullback or some sort of correction or something that happens with stocks, right? The stock market is a yo-yo going upstairs. So it's going to go up, down, okay. Right now you're in that little bit of a down. And the beautiful thing is, I don't know if this is a real name, but I just call it a naked LEAPS. You know, it's a naked poor man's covered call. You don't have any covered call like keeping it all warm and fuzzy, which is totally fine. I would not risk it, right? Because you bought that LEAPS because you thought that DraftKings was going to go up. You're writing the calls as a bonus. So right now is not bonus time to write those calls. You bought the call because you thought it was going to go up and you were going to crush money on premium and you were going to make money on that premium. So we need to be patient and wait for that. If you don't have the power to be patient, you shouldn't be buying LEAPS options. And from the sound of it, you kind of know that you're just going to have to sit on it for a little bit. And that's fine. You got a long time. Now, if we're 100 days out from expiration, all right, things are going to start getting a little bit weird because data is going to start to kick in. How long can you really hold before that happens? That might just be a situation where you start thinking about, okay, I need to sell this. I need to sell to close this and either take smaller profits than I once thought, or, you know, I wouldn't sell it for a loss until it's like at expiration, right? At least give it as long as you can to rebound. But I'm not gonna F with it. I'm not gonna get risky. Anytime I've gotten risky, most times I lose. Hold on to that thing, let it bounce back up. If you can get to the point, and here's something too, I'll tell you. And this is once again comments that I hear. If you're like bag holding it and to go above your break even, you're getting like $4 in premium. I know people that are like, no, I'm not even gonna waste my time. Now you said it could pop quick. So we also know that from experience at the poor man's covered call, not that great with stocks that can moon and jump around. We want steady, consistent growth. DraftKings is not one of those. So this might not be a case where you even want to take the chance. But if you're above your break even, you can get $5, $4. F it. Why not take $5 every week? As long as it's above your break even, and if you get assigned, which you're going to monitor it, so it's not going to happen anyway, even if the close out a loss, it's a little bit. But this is a long game, right? And in the video that I'm going to release this week of the 2 LEAPS options that I closed, one was like picture perfect. It was, I couldn't have written down a better start to finish for a LEAPS option. The second one, which I still did really good on, it was not. It had everything that was crappy. So in that, there was closing and rolling out a loss. There was times where I bought an option when I meant to sell an option. It was a disaster, but over the long term, by being patient, I ended up winning on that option. All right. So maybe check that video out as well. But once again, hold on to that thing. Let DraftKings go back up, or take a little bit of premium at a really, really, really small delta above your basis. if you're not going to go above your bases, we're not having this conversation. Just keep the leaps. Don't touch them. All right, bud. Thank you.